So capital gains are money you've made when selling an investment. Whether that's your business you've sold for profit, or some stock you've invested. So we hear a lot about capital gains tax and how it differs from income tax. And historically, capital gains tax has been lower, or less than income tax. But currently, we're also at an all-time low, as capital gains tax averages around 15% and income tax averages around 30%. And this is why people like Mitt Romney and Warren Buffett pay less taxes than you do, as their money mainly comes from profit off investments, and thus they pay a lower tax rate. So that's what capital gains tax is, but why does it exist? Well, like all taxes, it goes to fund the federal government, ergo public projects. But nobody cares about that. The real fascinating question is, why is it so much lower? Well, policy argues we want to encourage economic growth, and that happens through new businesses and new business owners. People starting companies, making products, and hiring people. This in turn produces jobs and charges the economy. And we always want more of that. So the idea is to reduce the tax on capital gains and encourage people to be entrepreneurs. See, often people need large upfront investments to make their business work. Like, say, purchasing a high-quality video camera to start a YouTube channel. And in order to buy that great camera, if you're someone like me, you have to take out a loan or investment from a bank and promise them a return on their investment. And this in turn incentivizes people on the large scale to loan or invest money. Since we're saying, hey, if you want to loan that person money and it works out, we'll tax you at a lower rate since you took that risk. This is roughly the same thing that happens in stock markets and why we classify stock market investments under capital gains. Now, do lower tax rates really encourage people to invest when they normally wouldn't? Or to start a new business? Or invest stock in a company? I would argue not really. Nobody starts a business entirely based on lower tax rates. They do it because they believe in the product or idea, and loans and investments follow that same pattern. We do things much more out of an emotional attachment to our work, rather than rational actors always considering the economic consequences. However, a lower tax rate does encourage people to take risks, particularly in investments as they tend to pay off larger, and especially when you're several steps removed from the product. Say videos on YouTube get hot and an army of people start applying for loans to buy high quality cameras. Now, a majority of these channels will fail and they'll incur more debt than they can handle, but the bank doesn't want to think about that. They just see a market get hot and the potential returns to be made, and thus grant loans to people and companies they probably shouldn't. In effect, what's happened is incentivize speculation. A lot of the time, capital gains tax doesn't inspire you and me to go out and make great things. Instead, it incentivizes investment companies or banks to take a risk, sometimes for good, sometimes for ill. Another problem with the capital gains tax is how we define it. Like, for instance, stock markets. I would argue there's many different types of capital. Money, time, labor, and all of these equate to different things. And I would argue that someone injects their time as a form of capital into something is a far better indicator of value than just pure money. To start a great business, it requires a large amount of time and sweat no matter what. Whereas to make a good return on a stock is largely predicated on how much money you had initially to invest in, not how dedicated you were to the product or company. Which is why in the end there's a good argument to decouple the stock market from other forms of capital gains. Treating portfolio investments is very different than starting your own company and eventually selling it, and recognizing each as different things. As always, links in the description.